Hey guys, welcome back to the channel. Today I'm going to be adding on to the crypto bottom prediction series and going over some very key things I'm personally watching out for in order to help me navigate the bear market bottom. So if you're new to this channel and you want to show some support, please leave a like and subscribe. So my previous videos on the Bitcoin bottom prediction series have mainly been going over some indicators, some custom made, some a little more simple, going over specific timelines of when I think the Bitcoin bottom will be, as well as the specific price targets I had. So in today's video, I actually want to branch out a little bit more, and instead of focusing on an arbitrary time frame or price, really going over what would add to the probability that the bottom is in. Some targets, not necessarily to the downside or specific exact bottom targets, but really just going over, if I see this happen in the market, that will add to the probability that I think the Bitcoin bottom is in. So I'm going to be talking about Bitcoin on the USD pair, some key moving averages. I'm going to be talking about the US dollar currency index, DXY, as well as the S&P. So I do want to start off with the 200-week simple moving average. You know, I really like this because it's such a simple indicator. It's really useful, and it has historically predicted the bear market bottoms in 2015, 2018, as well as this COVID capitulation in March of 2020. Today, we are consolidating below this. So this is a little bit concerning for me. We do have 4 candle closes at the moment under this moving average, and it is a 200-week average once again. Currently, the 200-week average is at around $22,500, which represents us being about 11% below it. So ideally, one of the things that I'm really starting to watch out for is if we can reclaim this, if we can start closing back above it, holding it as support, and ultimately flipping this entire series of candles under this moving average into some sort of deviation, a failed bear break. And I'm going to be kind of illustrating that both to the upside and to the downside to help you learn a little bit more about what that would look like. So if we go back to 2017, we can see the all-time high was, of course, $19,800. And we're starting to see price action have the first initial retests of this level. We've never seen a prior cycle's all-time high retested. So this is the first time in Bitcoin's history in which we've done that. And one of the things that is going to be very interesting is if we can kind of spring out of this level, reclaim this moving average, and never really revisit this again. Because that would kind of lead me to believe, all right, well, maybe the bottom is in because we have a failed bear breakdown. And to give you an example, we had a failed bull breakdown to the upside in November of 2021. So we had this all-time high at $64,000 in April of 2021, right? This was the level that we peaked at. We came back down about 50%. And then ultimately we had a wick above it, and then only one candle close above this. So this was sort of the opposite of what we're experiencing today. We had one wick above this very key level. So we have one wick below the $20,000 region. We had one candle close above this all-time high, and then following that, we came back down. It was a failed bull break. We did not have any sort of reclaim of this level. We did not get above it. We only had one candle close above it. So we're seeing something similar, right? We have a wick down below $20,000, one single candle close at the moment that is below this $20,000 area. And if we're starting to move back up, it could be the same thing where it's sort of an indication that the bears were really unable to advance this any further. They had a very key moment, an opportunity to flip this $20,000 area as historical support into macro resistance, and that didn't happen as of this moment. That being said, it could ultimately happen later down the road. We could have a wick all the way down to this level here and start holding this as resistance. That is not out of the possibilities, but it is something to watch out for. So if you do see in the next few weeks us reclaim this level, get back above the 200-week simple moving average, then it's going to ultimately look like, to me, a pretty big deviation below this level, a failed bear breakdown, and it's kind of going to be a very powerful signal, because when you have such an important and strong level that is kind of tested, doesn't really flip into resistance, but actually is reclaimed, it's pretty key. It's similar to this $30,000 area where we had a close. If I switch over to a daily time frame just to give you the context here, look, we had a $30,000 area that had a wick below it, right? We had a wick below it, we reclaimed it, came back up. It's sort of this level here where we retested it, failed to hold it for a brief period of time, and then we had a quick thrust back above it and formed this sort of failed pattern. So if we're starting to see that on the weekly time frame, that's going to be very powerful, very key for me to start kind of speculating maybe the bottom is in, right? It all adds in probabilities. The probability that we have a low in place would increase if we're starting to see this happen. So now I want to switch over to the monthly time frame, because I do think that it is very important when looking at a bear market bottom to consider a very long-term horizon chart. So I'm going to add over the 50-month moving average and show you guys how it would be something similar, because we've never had a monthly close below the 50-month moving average. And actually, we've only tested it 3 other times in history, right? March of 2020 on this COVID capitulation, we had a retest in August, and January of 2015. So only 3 other times in history. We've opened the candle below it. We're starting to see that the current price is below it, and we have a pretty long time to go before this monthly closes. So it will be interesting to see, can we reclaim this moving average, right? Can we get back above this and reclaim it? Because if we can, that's going to be a very bullish sign. It's going to make this look like a spring, a failed bear breakdown, and it's going to make me really consider, well, is the bottom in? There's going to be more probability towards that outcome. So I wanted to switch over to DXY now and cover this, because this is going to be very key looking out from a longer term time horizon. And the DXY, if you're unfamiliar, the US dollar currency index, this is going to be valuing the US dollar with respect to other currencies. How strong is it compared to them, or how weak is it compared to them? And we're seeing how it's on this massive tear, right? It's rallying, it's going crazy. It's in this parabolic structure. It's up 18% in just the past 58 weeks. And you might be saying, oh, well, 18%, that's not much. But for a nation's currency, this is a lot. Okay, we don't really see 18% rallies in DXY very often. And historically, we can consider DXY and risk on assets like Bitcoin and the stocks to have a pretty strong inverse relation. So we can see how DXY ultimately bottomed in this May-April timeframe, right? We had this second bottom, double bottom formed, really retesting this level in May and April of 2021. If we switch back over to Bitcoin, on the monthly, we can see that the first initial peak was in April of 2021. So the top of Bitcoin corresponded to the bottom in the US dollar. If we go all the way back to January of 2018, we can see this is when the dollar bottomed. We had the bottom in the dollar in January of 2018. If we go to Bitcoin, we can see the top was in December of 2017. So a little bit lagging, but they were very close in terms of time frame. We can also see that the bottom for Bitcoin was in December of 2018. If we go to December of 2018 in the US dollar, it really started to stop this uptrend in December of 2018, right? We had rallied from this bottom to December of 2018. We had rallied about 10%. So it was pretty significant. And then from this point on, we just went sideways. The dollar didn't do much. It really didn't have any more advancement until March of 2020. This is when the dollar had a pretty huge surge, right? It went up 7% in a week. And if we go over to Bitcoin, we can see March of 2020, that was when Bitcoin capitulated. So it's a pretty strong inverse correlation. What we want to see here is for the dollar to peak. If we can see some sort of break of a parabolic structure, that is going to be a great sign for Bitcoin, and not just for Bitcoin, but risk on assets. So if I just draw a general curve, you can see that we're really starting to enter this almost parabola-like pattern where we're just getting, steeper and steeper on this rate of change, where it's just, increasing at an increasing rate, right? So if we start to see that break, if we start to see a top in play, maybe we advance for a few more weeks and ultimately form some sort of mania phase, blow off top, and then start coming back down. That would be a very good sign that Bitcoin has bottomed. And for me, I think this is going to be a pretty obvious signal, because we're already in the stages of the late stages of a parabola, right? Obviously, you can point to some sort of macroeconomic conditions and say, okay, the dollar is going to go up forever, but I don't really buy into that narrative. I think this is going to peak out eventually. And when we do peak out, this is going to be a very key signal for not only Bitcoin, but stocks as well. And that leads me to the next chart, the S&P. I do want to talk about this, not just because they're very correlated in the short term, but over the long term, the S&P doing well is going to help Bitcoin. So in general, if you see the S&P start to recover and go back up to some of these highs here, whether Bitcoin is at $20,000 or $30,000 or $40,000, when that happens, this is going to be another sign that maybe the bottom is in, right? If the S&P is recovering and starting to move back up to all-time highs, then it's going to be a very good sign that Bitcoin has likely bottomed as well, because we're seeing that very strong correlation in the short term where, Bitcoin is acting like a tech stock, or it's, acting like one of those higher riskier assets where it's correlated to the S&P, and on every downturn that's kind of putting more stress on Bitcoin. So if you do see some relief in the S&P market and starting to move back up to these all-time highs, then that is going to be a very key sign that maybe the bottom is in for Bitcoin. Again, these are all probabilities, and I think that, with the check mark of, okay, have we done this? Each one of those that we check off, it's going to add to the likelihood that Bitcoin is bottomed. Like one single thing cannot tell you exactly what's going to happen, but having a range of things to watch out for, ultimately, I believe, is going to be very key going forward through the bear market stages and ultimately into the next cycle. So I hope you guys did enjoy this longer term Bitcoin bottom analysis. Again, it's not a specific price target or a specific time frame. It's more of, if this happens, then I'm going to start becoming a lot more bullish. So I hope you guys did enjoy. If you have any comments, suggestions, or feedback, please do leave those below. And as always, I will see you in the next one.